Hi there. Welcome back to the weekly channel. Last week we talked about whether the Fed will crash the market, and it did. So this is also to follow up on what we have covered last week. And let's take a look on the Dow chart and see on a weekly basis or throughout the whole week how the Dow has performed. So what we can see was that the Dow actually rebounded in the early week because of the CPI number, which came down. And this CPI number is very crucial for the Fed decision for the future interest rate. So market expected the Fed to come out with the 0.5 basis point, and it did happen, but the interest rate projection actually went up to 5.1%, which disappointed the market. So what happened was, after that, the Fed did crash the market. The market reaction on Thursday was quite bad. As you can see, I did draw a breakdown last week, and it did break down from the support level at 3,383, and it went further down to break below this previous resistance turn support at 33,084. So if the downtrend were to continue, what we can see here is that the Dow has actually formed a topish pattern, and we have a mini double top over here. And if the Fed stole the Christmas away, then we would expect more downward movement towards this low around 32,225. This is the first level projection. But then if you were to go by the self-fulfilling prophecy, which it should hit the support level, so the support level will be around 31,744. So the charts has gone bearish, and we have to watch further to see whether is there any year-end rally that is going to salvage the current situation. So in order to salvage or turn the situation around, we have to see the Dow first go back above 33,383, and then the resistance level that we are going to face is 34,731. This is a very important movement in order to turn the market around. All right. Looking at the S&P 500, the chart is even worse. As you can see, S&P 500 went down to fill up the gap over here, which I'm going to plot it up here. So last week I mentioned that the gaps are meant to be filled, and it's a black hole that would attract the levels to come in, and S&P 500 came into this gap, filled the gap. And if you were to look at the chart before this downward action, we can see a very strong sell-off after the CPI number was released. The market rallied to test the resistance over here, but unfortunately selling started. Seems like the whole market knows that the Fed is going to increase their interest rate projection, so profit taking sets in. And then after Powell speak, the whole market continued to sell. Then the reaction on Thursday, following through the sell-off and breakdown of the key major support level at 3,917 is pretty bad. Then filling up this black hole is a natural cost. And what we see is that we have a topish pattern here, which look like a double top. And if I were to do a projection here, we have a potential retest of this support level at 3,743. If the market were to go through this, I would say early of the week, it may hit there already. So on Monday, tomorrow opening, market may continue their sell-off until they test the support level. I'm hopeful for some other surprises, but we are bracing for this Okay, Nasdaq is also very bad. So we can see a triple top breakdown. A triple top breakdown over here. 1, 2, 3. Breaking of this major support level. And the projection can be here. Let's do one projection here. We have the projected level to be somewhere around this support level, around this 10,358. And of course, the black hole here is waiting to be filled entirely, and we can see partially filled. Again, it has Nasdaq also been sucked into the black hole, and the bearishness is looking to continue. So overall, the US market seems to be bearish, and there seems to be more downward action, with all breaking down from their major support level and projected to go down lower. STI, let's go to the Asia market, has a stoppage pattern. So STI did not break down from this low last week, as it got helped by the China reopening news, as it pushed up to the high over here with a shooting star. And then Thursday, follow through selling. Friday, sell off heavily, and it is on course to test this major support level around here, which is the neckline or breakdown point. So we can see a small shoulder here, a top, a slightly higher top, and then another shoulder, which represent a head and shoulder pattern. And then we have a potential breakdown coming, which could be looking at STI being sucked into this hole at this 3,281 to 3,210. Sorry, I beg your pardon, 3,181 to 3,210. To the projected level, this previous resistance support at around 3,141. So if STI were to come to test this 3,225 level, it will be sounding the alarm and brace for breakdown. Hang Seng is looking relatively strong as the uptrend remain intact. We can see the uptrend line over here remains sound and safe. If Hang Seng were to pull back due to the US sell-off, I hope that we can have a small pull off to this, or rather pull back to this trend line, and then rebound and break out from this resistance at this 19,960 to continuous uptrend as it look for the new direction after consolidating for the whole week of the 12th to 17 December. So Hang Seng overall still look okay, and we want this support to hold, like I say. Okay, now wrapping up, next week, US market, some key data that we will be looking at is the GDP. So if the GDP goes down, maybe the Fed will softening the rate hike trajectory. Like for example, the next increase will be 0.25 basis point instead of 0.5, because if it goes next January, it goes 0.5, then already hit its projected target. And I think that's a reason why they increased to 5.1, because they want to do it 0.25, 0.25, 0.25 until the inflation numbers goes down towards the targeted level at 2. Then we have the core CPE prices number, which will tell us further about the inflation. So also we have this core durable goods order, and yeah, these are the things that we are going to look out for next week. So if next week we have a Santa Claus rally before the Christmas, then we shall see some miracle. For example, covering S&P 500 again, just I mentioned Dow, S&P 500 would goes back above 3,917. Nasdaq Composite would miraculously go back above 10,935. Okay, so next week will be a holiday week, and then followed by the next following week. So this will be the last video for the year. I hope you enjoy it. Although yeah, the viewership is not that consistent and also not long enough. But then thank you for your support, and I will see you in 2023. Have a good holiday ahead. Goodbye.